What is a dynamic support and resistance? It is an area where price reacted to in the past and can potentially react to in the future. So these areas are found on the monthly and weekly time frames as they hold more weight. These areas are obvious. So let's hop onto the charts so that we can identify these areas. So this is AUD CAD and this is a monthly time frame. So we're going to be starting from the left. So if you're looking from the left, you've got this area there where price reacted to with these long wicks. We're going to mark it in. So that will be our extreme swing high, as that is the highest point in this time. And then the price came down, and then in this point the price reacted and then it went up. So we're going to mark it in. So one of the things that you should note is that these are not lines, these are areas. So you shouldn't treat them as solid lines. And then from here we're seeing that the price reacted and then it went up and then it reached this area. So we can see that you've got multiple rejection in this area. So let's also mark it in as our dynamic resistance. So this is our support because the price is trading above this area, and then this is our resistance because the price is trading below this area. And if you can see here, there's a rejection that is happening here, there's also a rejection that is happening here, and you're seeing all these candles, they have multiple, or they have long wicks, which is showing a reaction that is happening. And then the price came here and it broke this area, came back just to try to retest this area, and then it turned here. So we're going to treat that as the extreme swing low, as this is the lowest point that we have here. So we are done. We're going to move over to the weekly time frame. One of the things that you should note about these areas is that they are obvious, so you should spot them within seconds. If it's making you to think twice, then leave it. So okay, let's do it like this. Starting from the left again, we're seeing that there's a rejection that is happening in this area. Okay, let's change the color since we are on the weekly time frame, just to distinguish between the monthly and the weekly. So one of the other things that you should notice is that your price, when it's rejected or it's reversing from these areas, the move would be significant. From here you see it broke and then it retested this area, and then the move was significant. Even if you come here, you will see that the same thing, it rejected this area and then it impulsed to the downside. So we should mark that area. And then which other area is okay? There's another area here that we need to also cater for. Okay, sorry about that. So if you're looking at this area here, it was a support, and then the price went up and then it came down, it broke this area, it came down, it came up and retested and then came down. So this was a support to this price movement, and then when it was broken it became resistance. And then if you come here, resistance again, then it was broken, come back, still a resistance. So that is our dynamic, those are our dynamic areas. So you can fine tune. If you see that the price is not showing clear, you can fine tune them, because you should treat these areas as areas, not as lines. So let's go to another pair to show the same example. We're going to be using, let's say, AU Euro JPY. That on the monthly time frame. Okay, so this is okay. Again, let's start on, do it like this. let's start on the left again. We're seeing that the price reacted here in this area 3 times. So let's mark it in. Let's draw it in as our dynamic support. Remember, we said that monthly is going to be yellow, so that will be our extreme swing high. So the price came down and it reached this area, and here the price went up after rejecting this area as the support. So we're going to mark it down as our support because the price reacted to that area. After reacting, it went up and it came to this area, and then the price tanked down. So we're also gonna mark that as our resistance. Okay, the price came down, went up, okay, broke up, and then reacted this on this area as a support, then it went up and then it came down. So we can also mark that. That. And then here the price came down and reacted in this area, it went up and then it reached this area, rejected this resistance, and then it came down, rejected this support, went up. So you see that your price is playing in this area. And then what we're going to do is we're going to move to the weekly time frame, so that we can also identify our weekly dynamic support. So if you look at this, you will see that the price, okay, let's also mark this in. So the price came here, it rejected this area, then it came down, then it went up again, rejected this area, then it came down. So we also need to mark this because the price reacted in this area. Reacted, and then it went up, then it reacted on, it rejected our resistance, then it came down, broke our support, came down, rejected it as a resistance, then it came down, came up, rejected this area. So we should also mark it in. So both these areas, here it was the support, and then here it became a resistance. Even if you look at this one was the resistance, and then it was broken up, and then the price came back to retest this area to make it a support now. Then the price went up, came here. Okay, just do this. Remember, you can fine tune because you are treating these areas as areas, not as solid lines. So we can put it like that, and then we can also do like this. So you have identified your dynamic support and dynamic resistance. Then let's go to the last pair to also show the same concept. Go to the monthly time frame. Okay, let's go to the far left. We're seeing that when the price came here, it rejected this area, and we're seeing these long wicks that are rejecting this area. So let's mark it, let's draw it. Let's make it yellow. Okay, you can make it any color you want. So if you're looking at this was rejected here as the support, and also rejected as the support, then it was broken up, and then the price went to retest this area as the new resistance. So from being a support, it was turned into a resistance, and then the price went up, and then we're seeing also rejection here, and we're seeing these long wicks that are showing rejection here in this area. We can also mark it as our dynamic zone. Remember, I said that these zones are obvious. You know, when you're looking at your chart, you should see them right away. If you're thinking, leave it. And then also coming, okay, we're also seeing that there's another zone here, okay, which is clear. We don't want to make our charts to be clustered. Let's move over to the weekly. Weekly time frame, and what do we see here? We are seeing a rejection. We are seeing a rejection here. Okay, let's change the color since we have changed the time frame. So we're seeing a rejection here, we're seeing a rejection here, we're seeing a rejection here. We're also seeing a rejection here. So it was broken up and then rejected our monthly resistance, and then came back, went again for the second time, and it failed to break it, and then came down and rejected our this area. So this, when it was rejected here, it was rejected, it was retested as a new support. So that's how you identify your dynamic and your dynamic support and dynamic resistance. It's easy like that. You don't want your chart to be clustered, because if you make it to be clustered, it's going to confuse you. So try to make it as simple as possible. In the next video, I'm going to show you the strategy that I would use building from the dynamic support and resistance. Thank you for watching. Please, if you're new, consider subscribing to our channel.